Harmony Gold out with fourth quarter numbers this morning, and like the other miners to report back, production improved over the 3 months. The group reported a 49% rise in cash operating profit for the quarter, while its headline loss per share improved from 24 cents to 6 cents. Joining us to chat about the results and the prospects for the gold sector are Graham Briggs, he's the CEO of Harmony Gold, and Chris Hart, Chief Strategist at Investment Solutions. Gents, thanks very much for coming in today. Graham, you're given a final dividend of 50 cents a share, and you say in the commentary that this indicates your return to stability strategy to reach sustainable profitability. Of course, a lot of that must hinge on where the gold price goes from here, and also what you do with costs going forward, because costs are still an issue, aren't they?
Stephen, they have been a big problem in South Africa, and I think they've been a big problem worldwide. But we've indicated in a lot of our cost control that we've actually managed our costs very well. If you look at them quarter on quarter, and you look at things like electricity, I mean, it's gone up massively, a big increase, winter tariffs and the like. We've managed to contain our costs, and this quarter has been the first quarter of full royalty. Even that in our costs, in our rand per kilogram, has been static. So we're doing quite well on costs and cost control. The gold price, sure, but we are bulls. We are in the gold mining business, and we gold bulls, so we believe that there's a lot of potential in the gold price.
Of course, these costs do include Hidden Valley's operating costs for the first time as well, so that has pushed up the cost line. Obviously, you're going to sit with winter costs, electricity tariffs again for the current quarter. You have that Eskom increase, which is ongoing, and it's only going to get worse next year.
Yeah, and if you go back about 2 years and you were asking for a prediction on what's the electricity cost going to be into our total cost, we would have estimated about 16%. In fact, it's about 13%. So we've got 3% that we've actually won back from just savings electricity.
Chris, let's pick up on that point when it comes to the cost structures for gold mining companies. Tough out there.
It's been a problem. Effectively, there's a race between costs and the gold price. The gold price is doing fairly well over the last 10 years. But it has been a bumpy ride for the rand price of gold because of the the exchange rate that also gets in the way of that. But in dollar terms, it's been great. But the costs have been a pretty hard contender as well. In that, and obviously there's a couple of factors that are running here, including the depth and the grades, but it's also labour, which is increasingly a problem, and of course your administered prices, big problem. And electricity is a huge input cost for the mines, and the tariff hikes are not helpful at all. It is an industry that can resurrect, from what we call the so-called sunset industry. There's a huge amount of ore that can still be mined if the gold price is right and the productivity is right, etc., that one can actually get. But who knows, in the next 2-3 years it might actually happen, because I think while you're still printing money, etc., offshore we're going to have problems with your fiat currencies.
Graham, is that right? Is there a huge amount of gold that can still be mined at the correct gold price? Because you have been closing down less profitable shafts, shifting your focus to Papua New Guinea, where you have some good prospects.
Yeah, in South Africa we've been closing several operations, but they're really near the end of their lives. Their ore bodies have been depleted. But at the same time, we've been spending a lot of capital on new projects, and we're going to have some great mines in South Africa. We've got some great projects, and they're going to be good producers. And, like Chris says, we're looking a lot at productivity, on improving productivity, and there's a whole range of areas that we look at there, from health to environmental conditions to, making things more pleasant on operations. So we're looking at a lot of areas there.
Graham, it's obviously, it's quite a tough environment at this point in time, because it is getting deeper, it's getting more expensive, and it's definitely getting more dangerous. There's one thing you can't control, and obviously that comes to the rand. You mentioned productivity levels, that's quite important, but the way that we headed in South Africa at this point in time, productivity is still a lot left to be desired. Apart from that, we also have aggressive wage negotiations. How is that factored into your business model?
Yeah, I mean, we have to do a lot of things in that area. I mean, we have to make sure that our working environment is actually conducive to good working. So it's nice and well ventilated. It's got to be safe and so on. But we also have training programs for guys. We've been doing spending a lot of money on training, and the health and also the age of the workforce is a big factor in the mining industry, where if you've been retrenching for several years, your workforce tends to get older. We've managed to keep our workforce static because the people that have been volunteering for retrenchment have been older people near retirement. So there's a lot of issues that one can actually follow through to improve productivity.
Chris, would you be an investor in gold companies? Would you go for ETFs rather? Gold companies, obviously, you're getting a bit of a leverage on the gold price.
Well, I think over the last 2 or 3 years, the ETF actually would have been a better bet because it looks like costs were winning the race, etc. But I do think that there will be a time, and I think we are at a point where the gold price will start to accelerate upwards. In other words, with the problems that we're facing in the world, I think that is a very good possibility. And that means that your gold miners will start to come. One of the problems is that gold production has been falling over the last few years because of the lack of availability. So people who have it, in other words, producers who are really sitting on good resources, and Harmony's got particularly wide resource pool to leverage, that will start being valued again, and you've got that optionality.
Graham, we mentioned the numbers, the hard numbers. 6 cents loss per share is what you saw for the fourth quarter. What kind of recovery are you expecting? Because we know that you're busy doing quite a lot of exploration as well, and you've got a lot of pipeline projects. But when are we going to really see the turnaround in the company and see some growth?
Yeah. Well, you've seen a dramatic turnaround in the company in that we've been spending capital on major projects, and those projects are just starting to deliver. If you look through the financials, you'll see there's a lot of one-offs. You'll see things like deferred tax. Now, deferred tax is an estimation, and that really says that we're going to be more profitable in the future. That's why the tax has changed quite dramatically. So, you are seeing the changes, but in developing and producing from a deep level gold mine in South Africa takes many years. And we're right near the edge of that. So within 2.5 years, these assets are really going to be producing good.
Wafi Gold, and that's one of the ones you're still prospecting for in Papua New Guinea. So obviously, Hidden Valley is now fully commissioned. Yep. When would you expect movement on some of the other projects?
Stephen has got to go through several sort of stages, through pre-feasibility studies and feasibility studies. It's going to take a while to make all the right decisions there. So hopefully, if one's very hopeful, one would say producing in 2016.
And the size of this resource?
It's going to be big. It's at the moment you've got about 38 million ounces equivalent gold in that resource. So it's big.
All right, Chris, of the gold miners out there, which company are you looking at right now as an attractive investment opportunity?
Well, I think the big three, Anglo Goldfields and Harmony. Harmony offers I think the best value in terms of optionality, etc. If you want to punt a rising gold price.
And anything that really stuck out for you when it comes to Harmony's numbers?
Well, I think the fact, a lot of people focus on that headline loss, is that even with the gold price, above $1,000, Harmony can't make money, and that's why the investors, in fact, have shrugged away. And I think when that turns around, and when the projects that are coming on stream do come on stream, and if they do deliver at a reasonable cost, and the company can start raising its dividend, I think the investment community will be a lot more interested.
Graham, prospects for the current quarter, how's it looking so far?
It's going to be a difficult quarter, Stephen, as you alluded to some of the cost pressures, increases coming through in 1st of July they came through. Still got 2 months of winter tariffs this quarter. So this quarter is going to be a difficult quarter, but we're very optimistic, and we're sticking to our strategy, and we're driving it.